Hello and welcome to the Money Show, your trusted guide to navigating the world of personal finance. I'm Kavita Thapliyal with you. In a time when every financial decision matters, managing money wisely has become more important than ever. Whether you are planning your investments, looking to grow your savings, taking a loan, preparing for retirement, or simply trying to make smarter financial choices, the right information can make all the difference. Now, at the Money Show, we break down complex financial topics into simple, practical insights that can help you make informed decisions. Our goal is to help you understand not just where your money goes, but how it can work harder for you and support your long-term financial goals. Every day, we bring you experts' perspectives, market trends, investment ideas, tax-saving strategies, and real-world financial solutions designed to help you build wealth and achieve greater financial security. Because at the end of the day, personal finance isn't just about numbers. It's about creating opportunities, achieving milestones, protecting your future, and turning your aspirations into reality. And speaking of milestones, few financial goals are as significant or as emotional as buying a home. That's exactly what we are focusing on in today's edition of the Money Show. That's right, a very important topic and a very important financial goals for our lives. Now, this is the guide for first-time home buyers. Now, for generations, Indians owning a home has been more than just a financial investment. It's a symbol of stability, security, and success. It's where families grow, memories are created, and dreams take shape. But while buying a home is exciting, it is also one of the biggest financial commitments most people will ever make. For first-time home buyers, the process often feels overwhelming. From deciding how much home can you afford to understanding home loan eligibility, interest rates, down payments, registration costs, taxes, legal documentation, there are several moving parts involved. A wrong decision today could have financial implications for years, while the right decision could set the foundation for long-term wealth creation. Now, the good news is that first-time home buyers in India have access to a range of benefits and incentives that can make home ownership more affordable than many people realize. Government-backed housing initiatives have been designed to encourage home ownership, especially among middle-income families. Eligible buyers can benefit from interest subsidies on home loans, helping reduce the overall cost of borrowing and making monthly EMIs more manageable. There are also valuable tax benefits available on home loans. Home buyers can claim deductions on both the principal repayment and interest components of their loan, potentially resulting in substantial annual tax savings. Over the life of a home loan, these benefits can add up to a significant saving. For those considering under construction properties, lower GST rates on qualifying housing projects can further reduce acquisition costs. At the same time, maintaining a strong credit score can improve access to lower borrowing rates, helping buyers save money throughout the tenure for their loan. And when it comes to women home buyers, the advantages can be even greater. Many banks and financial institutions offer preferential interest rates to women borrowers, making home loans slightly more affordable. Several state governments also provide lower stamp duty charges when property is registered in a woman's name, reducing the upfront cost of buying a home. In many cases, having a woman as a co-owner or co-applicant can unlock additional financial benefits while also improving the family's overall loan eligibility. Now, these incentives are aimed at encouraging greater property ownership among women and promoting financial inclusion. However, taking advantage of incentives alone is not enough. Before signing on the dotted line, prospective buyers should carefully evaluate their finances, determine a realistic budget, account for hidden costs, compare loan offers, and understand their repayment capacity. Experts often recommend ensuring that your home loan EMI remains comfortably within your monthly income so that home ownership does not come at the cost of financial flexibility. Now, equally important is conducting proper due diligence on the property itself. Buyers should verify ownership records, approvals, legal clearances, and wherever possible, focus on RERA registered projects to ensure greater transparency and protection. A home is often the largest asset a person will ever own. That's why buying one should be approached not only with emotion, but with careful planning and financial discipline. So whether you're actively searching for your first home, planning to buy in the next few years, or simply exploring your options, today's discussion will help you understand the opportunities, incentives, and key consideration that every first-time home buyer should know before making this life-changing investment. So all you have to do is just stay with us, because we will break this down, all of you, and how to do it in the smartest way possible. As experts, I have with me Mr. Pankaj Kapoor from Liasis for Us and Mehnosh Tata, CEO of Godrej Housing Finance. Hi, welcome, good evening. And a very important topic, one of the most important financial goals of every Indian, we can say. And Pankaj, let me begin with you. For someone looking to buy their first home today, is this a good time to enter the market? Home prices have, risen sharply over the last few years. Are we still seeing healthy appreciation, or are some markets becoming overheated? Also, which cities currently offer the best value for first-time home buyers, Pankaj?
In fact, the market is in the efficient zone, and inventory overhang is suggesting at all India level as a 20 months, which has never been like. So despite inventory being at 12 lakh unit at the top 75 cities across India, but is still the sales being robust. So that's basic reason inventory overhang is very, very good. Apart from that, why I say that it's a right time to purchase the property, because rental yield is also never been the level at which they are there today. Like Mumbai, Bangalore, and most of the cities are in the range of 3.5–4% of rental yield, which is clearly suggesting that the market is in the buy zone. And so the property prices, despite being productively showing a growth, which is also good because every asset should continue to be growing. But there's no price correction risk, because the reason is rental is clearly indicating that the capital value appreciation has been moderate. We are covering around 25,000 projects across India, of which only 17% of the projects have shown greater than 10% of price growth. Most of them have shown a price growth between 0 to 10%. And there's very limited number of projects where we have seen some kind of a corrections in the property prices, but this is less than 5% of the project. So most of the project in the landscapes, you find the prices being productive, inventory overhang being lowest, rental yield being one of the best ever, clearly indicating it's the best time to purchase the property. And most of the geography has been showing a good sales and robust supply. So the buyer have the enough supply to choose from. Builders are willing sellers, and there is a price appreciation scope. Infrastructure is also growing in most of the cities, and it is still a best time to purchase the property.
Best time to purchase the property. And when you're talking about your dream goal, every time is the right time. Mehnosh, won't you agree with that? And also a longer question for you. What are you seeing in demand from first time home buyers today? What age group is driving home loan demand the most? And how have affordability and borrowing patterns changed over the last few years? Are first time buyers really stretching their budgets more aggressively than before? What's the trend like?
Yeah, thanks, Kavita. We're seeing a couple of trends. One is clearly in the affordable segment, the age group you asked, that's closer from 35 to 40 is where we are seeing a lot of them coming in to buy their dream homes. A lot of them have, over the last 8–10 years, a decade, saved money, because you need to put in 10% at least of your own money when you're buying a home. Plus, depending on the state that you're in, there's a 5 to 7% stamp duty and registration that one has to pay. So almost 15 to 18% of the value of the home becomes the cost. And therefore, the affordable folks we see are closer towards 35 plus. On the prime side, I would say prime home loans, we are seeing the age group being between 30 to 35. A lot of them well-heeled folks, working professionals, having the spouse also working, and taking that step towards buying their dream home. And these are slightly younger, but they have higher disposable incomes and therefore willing to now own an asset which they can call their own home. So we're seeing clearly two trends emerging there. Post-COVID, we also saw a lot of interest in people upgrading. And therefore, the upgrades were from 1 BHK to 2 BHK to 2.5 or 3 BHK. And people wanting that small room within their own house, a small place where you could also do your work from home in the event if there's any such thing where you need to all be quarantined or at home. So we did see a spurt post 20 FY21. I think now the market is stabilizing. That initial euphoria clearly seems to have stabilized, and people are now looking at value in terms of where do you want to go and look for a house? Is it close to your office? Does the infrastructure support? Do you have the right kind of schools, hospitals, etc., which can be around, so that it's truly not just a house but a home that you stay.
Very important and nicely summed up. Pankaj, coming back to you and the previous answer, because you also mentioned about rental yields, I want to understand, since we're talking about first-time home buyers, is there any peculiar trend where people are opting for, buying in, living in rented apartment? Because that is always an ongoing debate, whether buying a house is good or renting it out is good. And we are seeing a lot of millennials also opting for that strategy, as in living on rent, or maybe preferring that as a good financial plan. Are you seeing those kind of trends coming up, Pankaj?
I haven't really come across the similar kind of trend, but
okay.
It's my own personal choice also. I always say that buying a property when the rental yield is good clearly indicates there is going to be capital value appreciation also. So in a market where the rental yield is being 4%, clearly indicating the capital value appreciations will always be 6 to 7%. So cumulative return, even if we look at the moderate level of appreciation, the property will be in the range of 10 to 11%, and which is like a safe bet. It's better than FD, and it is less risky in comparison to other equities or any other assets classes. So real estate being in the productive zones, my personal choice is giving better returns. You're creating assets which you can monetize any given point in time. Living on the rental clearly indicates that it's an expense in your pocket rather than appreciating assets in your hand. But it's a different people with the different choices. This has been in the narratives, but the way I've seen the housing sales been growing across last 5 years or 6 years, I still feel that there are enough number of people who are still considering buying as a better bet. It's only the people which are below 35 age who do not have affordability to be able to purchase the property, resort to be living into the rental, because it's still owning a property near to your workplace is costlier than living on rental. And that's where the option of rental comes is, but it is dependent upon what age bracket and what kind of a salary scales and how many years of the work he has so far executed. It all dependent upon those segments.
Perfect. Well, it's time for us to dip into a short break. But then once we come back, we'll be talking about having the right kind of due diligence and also the impact on your interest through your credit history. How important is for you to have the right kind of credit rating? We will discuss all of this after this break. Continue the discussion. Manoj, I'll come to you, and before we deep dive into the other aspects, I want to focus slightly more on the women buyers. Now, women buyers are becoming a larger force in the housing market. What trends are you seeing? Also, what additional benefits do women receive when applying for a home loan?
Yes, I think we are now seeing a lot of action where women are becoming either buyers of home or co-buyers of the home along with their spouses. This has been precipitated by and large by state governments who are offering a waiver of stamp duty anywhere from 0.5% to 1.5%. So that is a good amount of saving that the family gets if the woman is buying the property. It also actually is quite good socially, if you honestly ask me, because that means that she co-owns the house, and to that extent, she has a share in the house in the future as an appreciating asset. We are also seeing, interestingly, in the prime segment, women who are working and earning very well for themselves actually buying the home on their own and not having anybody else as a co-borrower. So it's quite an interesting trend that we have observed. And in our own portfolio, we see close to 20-25% of new applications coming in by these well qualified women who are working or even self employed, wanting to buy a home for themselves with their own money, actually. So this is good to see, and frankly, socially, it's heartening to see that they're participating in the asset creation as well.
Absolutely. Pankaj, let's focus on the due diligence part. How important is RERA registration today?
It has been a game changer for the real estate sector, especially in bringing the real estate supplier, especially builders, with that discipline in the market. Market is in the prudent zones, and thanks to the RERA, because the reason is builders are mandated to continue fulfilling the commitment which they lay down in the RERA portals. Like the timeline is they need to adhere and they need to construct within the time frame. Otherwise, there is penalty which is levied onto them, and because of that, the real estate's being into the prudent zone. Price rise is also moderate. There's no speculative price rise, other than couple of states like North India and all those things where you find some bit of investor activities uh, and high price increases zone. But rest all the India is into a very, very prudent zones. So that is something which is available. And although the kind of a supply which has come in the last 3 or 4 years, what we used to see that with the launch supply, a market used to maintain 65-70% as a constructed supply. But in the last 4 or 5 years, the way the supply has grown, it has grown from 3 billion square feet to 4 billion square feet. But the constructed pace has not really grown in tandem with the increase in the supply. So clearly indicating there would be a execution default risk which is emerging in the market. So one has to be little careful in terms of choosing the developer, unless until developers past performances is existing projects construction is keeping in pace and they are delivering in time. One has to be little careful in investing with those particular builders. So they should do the due diligence in terms of builder selections, location selections also, because it's an end user driven market. So unless until you see social fabric in the locations, or location is habitable or likely to be habitable in the near future, be little aware of about those aspects before investing into the property. Third aspect is price productivity. Is like always invest into in the assets where the rental yield is good. So if the rental is good, that means the capital appreciation scope is higher. If the rental yield is low, then there is a price correction risk which may emerge in the market. So you may lose few years of capital appreciations if the rental yield is low in specific assets. So these are the due diligences. Apart from that, the legal, technical, micro market, and the developer. These are the four factors in which you need to probably do an assessment of the market and the projects before investing to the property. But RERA has been a game changer, all three.
RERA has been a game changer, but what can also be a game changer is your very good credit score. Manoj, what factors determine whether a borrower gets the best available interest rate? How important is a CIBIL score or maybe the right kind of credit score? And what score should buyers aim for?
Credit history is essentially your trust record. And therefore, it's absolutely critical that as an individual, if you are taking loans, whether it is credit cards, auto loans, or any of mortgage loans, you pay those on time. These become very important from a few points. One, very clearly, it actually determines whether you'll get a loan or not. If you have been defaulting, if you have been bouncing your checks on past loans, that does become a challenge for financial institutions to lend. There are two critical things that institutions look at: the ability of the customer to pay and the intention. And ability gets judged by seeing what sort of income you're making and whether you'll be able to pay the EMI against that income. However, the intention is very closely viewed via the past performance of the loans that you have taken. And therefore, to your point, the credit history of all the trade lines that you have actually taken, the loans that you have taken are important. Many organizations, many banks actually link your interest rate to the score that you have. The better the score, the higher the score, the lower the rate of interest on your home loan, because it's directly proportional to the risk reward trade-off that one has. Many organizations also therefore look at higher loan eligibility if you have a higher score, maybe a little more loan to value in terms of the what you need from the contribution from the institution is given if you have a very good score. So all in all, I think it reflects discipline on the part of the borrower, not only just his repayment capacity. And therefore, clearly, banks and institutions and housing finance companies do give a reasonable amount of weightage on the credit history.
All right. So as we've heard today, buying your first home is much more than a property transaction. It's one of the most important financial decisions you'll ever make. The right home isn't necessarily the biggest home you can afford. It's the one that fits your budget, aligns with your long-term financial goals, and allows you to build wealth without putting unnecessary pressure on your finances. And with that, it's a wrap. Thank you so much, both of you, for taking your time out and helping our viewers understand every aspect of buying their first home. Thank you so much. And with that, it's a wrap. Thank you so much for watching. Goodbye.